Hey gang, it's Raghee here, and I wanted to have a follow-up to the Talk My Book segment from last week, back from the New York Traders Expo, where I had a total blast. We had a huge StockTwits dinner, me and the boys there at StockTwits. It was a lot of fun to put some faces, some handsome faces too, to the names on the at the StockTwits feed, and it was excellent. It was awesome to be surrounded by some world-class traders. And my last week, I have to tell you, has not been world class. It's been definitely an interesting transition as I move away from my 5-minute setups that I've been doing that have dominated my last 3 months of trading. And then the two trades that I shared on last Wednesday were my first initial forays into jumping to a longer term time frame. Now some of you might think, well, that's a weird jump from 5-minute to a daily. The reason for that is most of the charts that I would look at that are a little bit more intraday but longer term, 15-minute, 30, 60, they've been in different variations of distribution, and they've been equally tough to read from that market cycle perspective, which basically is the foundation for any trade. My clearest time frames have been the very, very short term or the very, very long term. So again, that's just my analysis. I thought I'd jump into that daily swing short on the Aussie, that daily swing buy in the Canada. Retrospectively, who knew it was going to be a risky trade no matter what? I knew that, but I thought it was worth sharing because at some point I will be venturing more and more into longer term trades in terms of the daily. I'll manage any time frame, but the fact of the matter is at some point you have to start testing the waters, and last week was my test. So what I wanted to do with the assistance of the e-signal replay mode was walk you through what basically you saw and what happened consequently. This was the first candle of the Talk My Book, and if you go into some market memory here, that 1-year look back that I like to view the charts at, that's more than 1 year, but basically that 1-year look back that I like to have so that I can get a decent idea of what the market cycle is. This was probably a little bit aggressive on the swing side of things, which is fine. I don't mind the aggressive swing. I think what was helping me out was the dollar strength. Dollar strength was pushing commodities down, and I figured, okay, this is a good opportunity to take that dollar strength, weaker commodities play, that correction that I was looking to take advantage of, and play it into a short on the Aussie. Now, I took my short here, and the bottom line of the wave was 88.80, actually 88.84. I jumped in at 88.80, as I told you guys, and the next day I was feeling pretty darn good about it. All right, as prices headed down low towards the 88 level, we actually made a low that day of 87.86. I actually ended up taking a small part of my position, a third of my position, out at 88.05, but that still left me with 2/3 of my position exposure. And you look to the next 2 days, and you can see how quickly things changed. And we're still seeing some of that odd action even today. Today I'm looking at the Dow. Not only just the Dow Industrials being up 23 points, but the YM futures that I trade, the front month is up 29 points. At the same time, my DX contract, my dollar index, is up 0.72. So, very unusual action. For the dollar index to be up 0.72 and the Dow not to be negative is an unusual thing. So, I know there's some weird factors in the market right now. I'm not going to be shaken because I think the analysis was right on, but I think that obviously I was wrong, and luckily I had a point at which to define my wrongness. Basically I'm out when we break 9,000. That was the setup. I'm in at the bottom line of the wave. I'm out at the top. The top also had the secondary confirmation of 9,000, and today here's where we are. And I don't care if this thing dips back into the wave or not. No remorse on the trades. My signature for my emails, my outgoing emails, is often wrong but never in doubt. I don't mind being wrong, but I don't doubt myself. I know this has been working for me for almost 20 years. It's not going to stop. I have to define where my trades are no longer valid. And stop losses, to be honest with you, it's a version of being right. I don't look at a stop as a negative. I look at ignoring my stop as a huge negative. So the other trade I had was the Canada. And that one went sour on me much, much faster. And I was probably a little aggressive, as I had mentioned, in that trade. And that's where I was looking for a bounce. This is where crude oil was really starting to weaken. Again, the commodities play, the dollars play was making perfect sense on this day of the pullback. And this was back right here. Okay, it was working out perfectly. and I had my swing trade in crude. I had everything I thought that was going to be in place, not just the price action on the Canada, but I had the supporting cast of characters, the crude oil contract, the CL symbol, and also the DX working for me, and boom, that was it. That didn't take very long. Once I hit that 480 level, I was out. And it just never got prettier than that. This one never, like the Aussie actually gave me an opportunity to take a profit target. This one just slammed me, 100 pips, bam, it was over. Okay, so the Aussie, at least I had an opportunity to be right for a little while and take a piece of my position off the table. The Canada never gave me that opportunity. So let's go ahead. I'm going to record a separate video here. So we'll wrap this one up as part one. Record a separate video and show you some of the futures that I'm looking at and where they stand right now.